Welcome back to another episode of Vault Talks. I'm JT Miller, joined here today by Steve Seger. So Steve and I have known each other for a little while now. I like to think our families are pretty close. Both went through Elder. Steve and I pretty much grabbed coffee probably about a year ago at this point, and Steve's in the real estate game. Just a guy I respect. You know, he works hard, has his goals set, and he's working towards those goals every day. Thought he'd be a great one to bring on. Without further ado, I'll kind of let Steve get into his background and tell you a little bit about how he got to where he is.
Yeah, JT, thanks, man. Thanks for being willing to have me on, too. I mean, this is cool. I've never been on the other side of the mic, so it's fun, and I'm delighted to be here. I am also from Cincinnati, went to the same high school as you, Cincinnati Elder, grew up on the west side as well. And then I went to Miami of Ohio. I graduated in May of 23, so a couple of years ago now. And I remember when I was looking for jobs and everything, I got a job offer through a friend of mine at Vanguard in Charlotte, North Carolina. I had never been to Charlotte, but I'm like, okay, cool. I got an offer. I'm done. I don't want to worry about it anymore. It was halfway through my senior year. I had different priorities at that point. Was having a good time. I moved down there right after graduation, like right at the beginning of June of 23. And I started in a financial advising development program. So pretty standard route that maybe like Fidelity or other firms would do, where you get licensed, got my Series 7, 63, SIE, all that fun stuff. And then they toss you on the phones and it's kind of just like do or die. Like, do you want to do this? And I remember they were like, it'll take about a year or two before you make the jump to advisor officially, and you'll be doing your CFP all along. I mean, I knew pretty quickly that it was not what I really wanted to do. And I was like, this is hard, but I'm fine with hard things. I don't know if I want to grind for something that I don't want to do long term. And I started to evaluate like, okay, well, what can I do that I like, that I'm actually interested in? And I was consuming a lot of podcasts and books on real estate at the time and decided, okay, I'll go into real estate. This is something that I'm interested in, and maybe I'll be happier at work too. And I started to apply in Charlotte, had no luck finding a role down there, and thought, okay, well, I'll go back to school, get my MBA, and that'll help me pivot a little easier. And I moved up to Cincinnati and got accepted to UC's MBA program, their full-time program, and was set to start in August. This was like January of 24, so I wasn't at Vanguard very long. And I was like, okay, well, I've got about 7 or 8 months here where I don't want to sit on my butt, and I want to actually get experience in the industry if I can. So I started to just do a bunch of cold emails and reach out to people in the industry in Cincinnati, try to grow my network a little bit, and maybe I can find someone to work for. And I listened to my boss now, Jared Sturm, on the Bigger Pockets podcast, which is a pretty good show if anyone's interested in learning about real estate. I just sent him a cold email. I'm like, hey, I think your business model is really interesting. I was not familiar with the world of private equity or real estate syndications up to that point. So that was new to me. And he was generous enough to respond to my email and invite me into his office to meet him. I told him I wanted to try to find an internship of some kind. And I came on in, told him this is what I'm trying to do. And like, I'm asking for his feedback on how I can get my foot in the door somewhere. And he's like, well, like, tell someone that you'll work for free if you can pull it off for a bit. And it's going to be hard to say no. And I'm like, I could do that. Yeah. And actually, let me backtrack. This was over a phone call the first time we caught up. And then he invited me into his office to meet in person, because he's like, I'll refer you to a friend of mine. I want to just meet you in person, shake your hand, look you in the eye before I do that, which was cool to me. And we really kind of hit it off. I took his feedback very literally and came in with like a cover letter and how my skill set would translate. And I'm like, I'll work for free. I'll do what you say. Can you pass this along to anyone? And that day he called me back and he's like, well, like, instead of me referring you to someone, do you want to just work for me? And I'm like, yeah, I will. And he was kind enough to pay me still, which was really cool. And I started interning for them in early March of 2024 and was doing anything and everything, saying yes to every problem, anywhere I could try to be of value to them. I did it, and I was very happy to do it too, because I didn't know what I didn't know and I wanted to learn. And they were good people that I trusted. Just based on the few conversations I had, that was what I was looking for with a group I wanted to be with. From there, I made it to August when I was supposed to start school, went to a week of classes, and they offered me a full-time role running their acquisitions and investor relations at SNS. And I took it, and I flipped my MBA to part-time and have been doing that since. So I've been working full-time as their director of acquisitions and investor relations, and then finish my MBA in April. So that's finally done, and get my weekends back. Good to see my friends again and stuff. So
Yeah.
that was my long-winded background. I'll work on my elevator pitch and making it more concise.
I think that was great. And just hearing, I really like to hear your story because, you got into something right out of school that maybe you weren't passionate about and you weren't scared to pivot. I think a lot of people, especially our age, maybe they think they have to do what they went to school for, right? The first job they land, they put a lot of pressure on themselves. We're young, we're figuring it out. And, you worked, you put in your dues at Vanguard and realized, hey, I'm not going to be able to sustain this long term, but I am pretty interested in real estate. And at the end of the day, it comes back to your network. And I love your approach you took there. I'll work for free. I'll do whatever, I'm just here to learn and here to improve myself. And ultimately, 2 years down the road now, I'd say that's why you're in a pretty successful position.
Yeah, I got a long way to go, but I'm definitely happy where I'm at. It's been cool. And one of the things that I feel like is worth sharing is that, like, you don't have to do what you study in college. You can literally do anything and figure it out. Like, that was something I try to tell my sisters a lot because they're at that college age. I'm like, you don't have to study something to go be good at it. Like, a lot of it's just having the guts to say, I'm smart enough and I work hard enough to figure it out and do it well.
Yeah. I mean, nowadays it's a lot of just learning on the spot. You're going to be thrown into the fire. You're probably not going to know much starting out. I'm sure you didn't know a ton about real estate syndications coming from Vanguard, and just put in your dues, learn from people, get good mentors. And I think SNS is a great company. I would love to hear you talk a little bit more about just syndications in general. If the listeners heard of real estate investing, maybe they're not familiar with syndications. Can you kind of walk them through that?
Yeah, absolutely. And that's a good question. And I kind of get it all the time from people like in my personal network. They're like, what do you do? And I'm like, we buy apartments, and very similar to how you might buy a duplex in Cheviot and put it into an LLC. Maybe you own it, you invest in it, you potentially are going to get cash flow from it, and maybe you do a refinance or whatnot. But we do it at scale. So we buy these larger apartment communities, anywhere from, call it 30 to 300, 400 unit properties. And we'll put that community into an LLC, and then we'll sell shares of that LLC to our investors. So if my dad, for example, wants to be a real estate investor, but he's a busy tech professional who doesn't have the time or the expertise to change a toilet in the middle of the night, or understand how to negotiate with an insurance broker and provider on a 1970s apartment community, that's what we handle for you as the general partner. And then you're a limited partner investor. So you buy a piece of that property, and the benefits are passed back to you, similar to how you would get those same benefits owning that duplex in Cheviot. You're going to get the same tax benefits. You're going to get the same cash flow. And it's just less work. And the returns can be comparable if you're investing with the right operator. So I think that's what a lot of people like about what we do. And we're typically holding our properties 7 to 10 years, potentially longer in some cases. We're cash flow investors. So that's what we focus on the most, and forcing appreciation into these communities that are usually a little distressed to improve the overall value of the property. And maybe we'll do a refinance at some point. So I'm throwing a lot at you. Let me know what questions or what follow-ups will come up out of that, because I'm sure there are some.
Yeah. So I know, let's say the listeners never heard of it, but they say, you know what, Steve, I'm too busy, but I do want to invest in real estate. I'd like to be a limited partner in one of these deals. So what exactly does that look like? They essentially pledge money to you guys, and then what's the process from there?
Yeah. So for someone that's interested in investing with us, typically it'll come through a referral. We don't really market a whole lot our investment opportunities. We prefer to focus on operations and performing well. Naturally, people are attracted to good returns. Who wouldn't be? So by performing well, we haven't had to make or build a marketing machine to have new investors constantly coming in. And I think over 60% of our investors are repeat investors who just keep coming back and rolling more of their capital into more deals. So you kind of just get that velocity of money thing where you're redeploying money. But that's not your question. Your question is, how do you become a limited partner? What is it? So we are the general partner, S&S. We're responsible for the day-to-day management, and ultimately someone slips and falls on the property and they want to sue the property, we would be liable. The limited partners are limited to their initial investment. So if you invest in the property, say you put $50,000 into a property as your share of this community that we might own in Coleraine, call it, you would own a percentage of the community, and we would send you then quarterly updates through email, and then we do video updates along with those each time, and you would get quarterly distributions too. Does that answer your original question? I'm trying to boil it down to where it makes sense.
No, that's good for me. I mean, obviously, as you know, I'm pretty familiar with syndications. I just wanted to kind of unpack it because maybe some people haven't heard of these, or maybe they've heard of it and don't truly know what it is. Basically, you become a limited partner, you pledge money, and you have a ownership percentage in whatever deal you guys are taking down. And then, so you guys do quarterly distributions?
Yep. Yeah. So that cash flow that I talked about will come quarterly. Whenever bank account you set it up to go to, it just automatically comes in. And the term passive investing with real estate gets thrown around a lot. And that's kind of where it comes about. It's not passive if you're the general partner or you're buying that duplex in Cheviot, for example, but it would be more passive as a limited partner.
I think that's a huge misconception. There's a lot of people, they may see it on the internet or social media and think, oh, I want to be a real estate investor and create all this passive income. Well, as you've seen, and as most people I've talked to, I mean, until you're able to hire a property management company, which then again, then you run the risk of possibly getting screwed over here or there. It's not passive. So that's the difference with the syndications, is it truly is hands off. It is passive.
Mm-hmm. Yeah. And you bring up a good point about the property management side of it. I mean, it's a lot of work, and I should have said this earlier, but we do all of that in-house. So when we are renovating units, we're doing it ourselves. When we're leasing and running these communities, it's all us doing it. So it is a lot of work. And we evaluated third-party property management companies when we were starting to scale. And it just, in our market, it's hard to find a group that's going to run it the way that you want to run it, and how we want to run it. And that's hard, but long term is well worth it.
And I do want to touch on, I heard you bring up the velocity of money. So this is one of my favorite concepts to talk about. You know, as the listeners probably know by now, I teach the infinite banking concept, and that's one of the biggest principles that we teach people is, you know, it's not always about rate of return. It's about how many times can you turn over your dollar, you know? Can you get in a deal, get your money back, and get in another deal? So can you kind of talk a little bit about, you know, maybe your thoughts on the velocity of money?
Yeah. And I'll do it with an example of like how our deals cater to what you're saying. So like if we're doing a 10-year hold where we're going to buy this community that's distressed, we'll go into the property knowing that in 2 to 3 years, we're going to stabilize this community. Now, there's agency loans that these larger properties will eventually have on them. But when you go into maybe a more distressed community, that's like Fannie Mae and Freddie. And when you are trying to get those loans, they don't want a loan to like a really banged up property in some cases. And we'll take a bank loan from like a smaller regional bank for those first 2 or 3 years and really work hard to stabilize the community. And then we'll refinance, which is tax free at that point because it's debt. Like you were saying, you're stripping equity that you've created and forced into that property's value. And you're oftentimes returning it to your investors. And it's, in our case, it's been historically near or more what your initial investment would be. So a lot of our investors get back 50 grand if they put 50 grand in up front at the end of year 3, and then they still own that same percentage of ownership of the property moving forward, where they'll continue to get cash flow on that 50 grand. And ultimately when we sell, they'll get their big return at the end. But that 50 grand they get back at year 3, they can redeploy into another investment. And you're probably like, wheels are spinning. You're like, wait, like, so it's kind of like playing with house money. And like a lot of our investors that are repeat investors and have been for years have gotten to that point where they get their refis, they get their sales, and then they're like, okay, well, I have this capital. I want to put it into another deal and just continue to roll that snowball till it gets bigger and bigger. And you can do that in a lot of ways. So it's a really neat concept too, to wrap your head around.
Yeah, I could nerd out on it all day, but I think it all comes down to thinking long term and a little delayed gratification. They realize, well, why wouldn't I just keep rolling it over? Like you mentioned, it's house money at that point, you know?
Yeah, I mean, I'm not there yet. Like my snowball's not that big, but I'm trying my best. And the advice I always get from my mentor, Jared, is just think long term. Like it's not going to happen overnight. And I think that's pretty applicable in any path that you take. And for people that are closer to our age, it's probably hard to accept at times. You want to chase this shiny object, but that's something that I try to be intentional about, not chasing the shiny object.
It's tough at times. You know, one day it pays off. So I'm looking forward to that day. Like you said, not there yet, maybe down the road. But
yeah, that's what they say. They say it'll pay off. I hope. Yeah,
we'll see. We'll see, and we'll let the listeners know.
Mm-hmm.
But yeah, so I know you're also getting into these deals yourself, correct?
Yeah, I invest as a limited partner in our deals as well. And what's cool is the general partners at S&S, Andy and Jared and Coleman, who founded the firm, they're all our largest limited partner investors as well. So in addition to being general partners in the deal and owning their cut of the deal, they are also the largest LPs, and their family and friends are also large LPs in our deals. And same with me. I mean, people in my family invest as well. And it's cool, but I like it because it kind of lights a fire under me where I'm like, I need to perform and I can't fail. And I think they probably feel the same way. And I like that though. You create that pressure that creates those results that probably wouldn't necessarily be there otherwise.
Yeah, what's Ryan Day say? Pressure's a privilege.
Yeah, you're pulling on my OSU heartstrings there. I like that quote.
It gets me going. But
yeah.
No, that's awesome. I've talked to a couple syndicators, and obviously it all comes down to the operator themselves. Every syndicator I've talked to says, you know, hey, anybody can show you IRRs, anybody can show you returns, but it comes down to who they are as a person. And you're a great guy. I have not met your bosses, but from your word, I know they're great people as well. And the fact that they're some of the biggest LPs in these deals, I mean, that carries value.
Yeah, people say there's the term skin in the game. And they certainly live that. And I try to do the same with my smaller checks, but they are good people too. And that was, like I said earlier, when I was coming in to meet with Jared for the first time, one of the things that was important to me was like, I want to be around and attach myself to someone that I believe in and that they have the same core values and someone that will push you in the right way.
Not as many people are familiar with syndications or just real estate investing in general. What's kind of your approach personally? Because, I mean, just me being honest, I am in the stock market, but I believe that alternative investments are how you truly create wealth, whether that's buying a business, buying real estate. You need all three legs of the stool, right? You need long-term investments, you need short-term, and you need your savings bucket. But what's your approach to just personal finance in general?
Yeah, this is a fun topic. I applied to Vanguard originally because I was interested in investing. I didn't know what type of investing, and I didn't know what an alternative investment was until I started at SNS. I hold ETFs. I like having diversification at some point in my portfolio. Now I'm young, so my risk profile is a lot higher than it would be for someone else who's farther along in their career. So like the bulk of my portfolio is SNS deals, and
Yeah.
maybe that is risky. I believe in these deals, and I'm doing a good chunk of the work on them. And I am comfortable with that risk, knowing what I know behind the scenes about these deals that we're working on. So I'm fine allocating a higher percentage of my personal portfolio to our deals. And then I do have a little bit of ETFs in a brokerage account at Vanguard too. And that's just kind of I like to have a rainy day fund, I guess, of some sorts there. And I try right now to deploy as much of my money as possible into what I'm working on with these deals. And I pay attention to my savings rate pretty closely too, focusing more broadly on personal finance. Like I live at home. I'm recording this in my parents' guest bedroom. I'm very open about that. Like I when I moved back, I was looking at houses and ultimately decided like I'm going to call it a sacrifice. I'm going to live at home for a bit and really try to aggressively save money and invest that into this vehicle that I have access to at SNS as quickly as I possibly can to make that snowball roll faster that we kind of talk about with compounding. But savings rate is a big thing to me. Maybe people will frown upon this, but like I have my bank account and some stuff, my checking hooked up to ChatGPT, and like I'm not saying do this, but it's incredible the amount of data you can get on your spending, and you can kind of, I mean, there's so many personal finance apps that do it, so you should probably go use those. But I'm able to see like, okay, this is my savings rate, meaning how much am I saving versus spending each month? What percentage do I need to be at to hit my goals? And where can I cut things out, or where am I getting too relaxed in certain areas? And that's worked for me. It might not work for everyone, but that's broadly how I approach it at this point. And JT, like I have a long way to go. Like I'm young and recognize that right now I should be listening a lot more than I'm talking. So it's a little weird for me to do a show like this and be on the other side, but fun. And hopefully I can continue to learn and meet cool people like yourself too.
Hey, I appreciate it. And I mean, I love what you just touched on. I'm in the same boat, same thinking as you. At the end of the day, it comes down to how much can you save, right? A lot of people can make money. Not a lot of people can save money. And yeah, it might kind of suck when, me and Steve are saving and living below our means, but one day that sacrifice pays off. And if I could teach anybody anything, it's just delay gratification, put in your dues. In 10 years, your future self's going to look back and say, man, you did a hell of a job.
Yeah. I mean, you could make 300 grand, but if you're spending $290,000 a year of it, like the person that is making 80 grand and saving maybe 40 grand a year is making more money than you. And maybe they're not even working as hard. The lifestyle creep is definitely a thing in any case. And sure, you're probably living more lavishly, but that's just not how I'm going to approach it personally. I'm not saying it's right or wrong, but that's how I see it.
I'm the same way. Yeah, the lifestyle creep it sounds enticing, but one day we'll get there, One day I'll buy that cool watch that I wouldn't let myself buy until I hit these certain milestones. So we'll keep you guys posted on that journey. But
yeah,
that will probably be one of my first purchases, is a nice watch. I think
a watch.
Watches are pretty cool. I was never huge into them, and the older I get, I'm like, man, I really appreciate the craftsmanship and just kind of the community you join when you buy one of those, but we're definitely a long ways from that.
There's like a community around watches. I don't know anything about watches, so I mean, I got my Whoop, but that's not a watch. So
no, that's how I am. I'm actually Team Garmin.
Okay, yeah, that's my
Garmin, Whoop, whatever smartwatch I can get my hands on to track my fitness and heart rate and all that good stuff. But Yeah, those watches are pretty cool the more I learn about them, you know. A lot of those guys, they'll buy a watch, wear it for 2 years, and sell it for what they bought it for or a little more, and then upgrade at that point. So it's a pretty cool game. I used to be really big into sports cards back in the day. Just, you know, trading cards, collecting cards. I kind of view it as that, you know, how many cool watches can I wear and then get rid of and get a different one. But, you know, we're a ways out.
You can stick with the Bowman Chrome packs for now on the baseball. Yeah.
Yeah, I'll stick with the Garmin. That's all I need.
Yeah. What kind of watch would you buy? Would you get like a Rolex or something? Or that's all I know. So.
Yeah, Rolex would be one of the ones to start out with. I would never spend that much on a watch, but just a cool one when I meet a certain milestone I have for myself. I'm a big believer in, you know, setting goals that are maybe seem out of reach, but kind of rewarding yourself when you get there. I think you got to appreciate the journey, and that'll kind of be my reward to myself one day.
Yeah, it's hard to appreciate the journey. Like you just said, at times I struggle with that, but I'm working on it.
Everybody wants the shiny objects like you talked about. And, you know, you think about what you're doing now and what it's going to look like in 10 years. Sometimes you just want to skip forward almost, but I think you just got to live in the moment, live where your feet are, and be present.
Mm-hmm. Well said.
Appreciate it, man. I do kind of want to talk about maybe your podcast a little bit.
Yeah, I'm happy to. I started that show, probably November. So it's been a bit now, I think 8 or 9 months. And I originally just did it because I wanted to network better. It's hard to get someone to say yes to giving you an hour of their time.
Mm-hmm.
I was like, how can I provide someone value in exchange? Because at the end of the day, everything is a value exchange. And I was like, well, I can build a community of listeners that maybe want to listen to these guests that I would bring on that I'm interested in. And it's working. I mean, like I've been able to talk to people and develop new friendships that I would not have otherwise. And it's been a really fun way to build my network and kind of put myself out of my comfort zone too. I didn't, for the first, I still get like a little nervous before. It makes you uncomfortable hopping on the phone for an hour with someone that you've never met and oftentimes has done some really cool stuff, and probably they might be nervous too. It's been a good growth opportunity doing that. I've enjoyed it. And it's something that I consider a hobby at this point, but one that I think overlaps with my long-term goals and even my role with what I'm doing at SNS too, in a positive way. And where I'm like recording a podcast on like a Saturday or a Sunday morning, that person may be interested in like investing in one of our SNS deals, or even just becoming a new friend too. And that's been really cool for me with that. I could go on all day. I mean, like everyone has a podcast now. Like both of us have podcasts. Like it's pretty, like it's oversaturated, and everyone has a. I'm not acting like I'm going to sit here and be the next Joe Rogan or anything. Like I know that, but my 2 cents on it is like it really helps you improve as a communicator, build your network. Like there's a lot of positives that come with it, and I don't see a ton of downside. Unless I just start saying really dumb stuff on my show and get canceled or something. But I will avoid doing that, hopefully.
No, I think, like you mentioned, I'm still newer to it. You have a lot more experience than me, but it's just been a great way to, like you said, grow my network. I mean, I get to sit down and talk with somebody. Maybe they want to do business, maybe not. Maybe we just become really close friends. But I was glad to hear you say that you do still get a little nervous, because I am only about 6 episodes deep right now, and man, I do get a little nervous, but I've really noticed, like you mentioned, just even my speaking skills, going back and listening to my first couple podcasts. I'm like, you need to clean that up or get those filler words out of there. It's just a good way to, you know, not only work on ourselves, me and you work on our speaking abilities, but like you mentioned, it's a lot easier to get somebody to talk with you for 30 minutes on your podcast than for no reason at all. So it's just been a great way to grow the network, work on myself, and like you said, I don't see myself being Joe Rogan. Everybody has a podcast, but if one or two people listen to my episodes and get something out of it, that's all I'm chasing.
Yeah. And if you can get some eyes on someone else's platform too, I think that's a win. There's kind of like a hump after like the 20th or 30th one. I was kind of just, you get less nervous. You get better at things. It's like a sport. I mean, you play basketball, you practice at it, you improve, and you get more comfortable with it. And I've felt like that is the case. And I mean, you can get shit for having a podcast and putting yourself out there, but like, I don't really care what people think about me. Like, I like what I like, and I care about what my family and my close friends think, and I try to lean into that. One of the things like I have been trying to focus the show on a little more is storytelling through these conversations that you have with people. But also I try to remind people that like you can hustle and grind all day, but if you're not sitting back and remembering what's important, whether that's like going to dinner with your family or calling your grandma or going fishing with your brother, like that stuff at least is important to me. Maybe it's different for you, but I try to remind people to have their priorities straight in one way or another.
It started out as a way for me to kind of just put these conversations out there for people because I was already having them, through work and through trying to grow my network. These conversations we're having right now, I was having them over coffee. And I thought, there's probably an audience who could maybe take something away from this, because I felt like I was getting a lot of knowledge. I don't have anything figured out. I'm young. I'm hungry. I try to meet people who know more than me and who have more experience than me, and hopefully take away a few nuggets from each person. I've tuned in from your podcast from the get-go, but I listen to your podcast. I listen to Joe Rogan. I listen to Andrew Huberman. I listen to all these guys, and I'm like, I think some of the conversations I have are interesting too, and I'll put them out there.
Yeah, put your hat in the ring. I like it. Yeah, I'm glad to be included in the same sentence as those two, though. But by no means do I expect to get to that level of growth.
Yep. Hey, you never know. That's kind of where I want to take this now is when I started my podcast, I didn't really have anything figured out, right? I was using my MacBook mic, sitting in the basement right now, editing it myself, and I'm just going to get started. I can always improve, but I think a lot of people wait for everything to be perfect or want it to be perfect. I mean, do you have any advice there? I know you're a lot farther along your podcast journey than me, but just kind of getting started over trying to chase perfection.
Yeah, I mean, I think your point's applicable to literally anything. Like what I do at SNS, when I started there, and I was learning how to crawl, I was doing stuff that like I thought was really hard at the time, and I didn't understand it. And I was nervous to do that. I don't know anything about property management, but I want to learn, and you can figure anything out. It's not that deep. Like most people out there are just figuring it out for themselves. And a lot of these people that you get to talk to through like a platform like this, maybe, or anywhere else in life, they're willing to take a risk and bet on themselves and say, I can figure this out. I'm going to work hard enough, and I might fail a couple of times, but eventually if I don't quit, it will work. So that's my 2 cents on that.
I love it. If you don't quit, you can't fail.
Right. Yeah. You just keep going, keep banging your head against a wall until it works. Yeah.
And eventually it will. Love it. My next question for you, Steve, is maybe just your own personal goals over the next, 5 or 10 years. I love to ask people kind of what their goals are. Sometimes it's a little uncomfortable if you've never thought of it, but I'm hoping that by you talking through your goals, maybe it makes people do a little self-reflection and think through theirs as well.
Yeah. I am trying to reach financial independence. And like some people hear that and they're like, what does that mean? Like you're trying to like retire young? And I'm like, no, like I would like to have enough of a nest egg that's cash flowing, ideally more monthly income than my expenses. And my expenses will continue to increase if I end up having a family, ever leaving my parents' house. I always joke to them, I'm like, I'm not going to leave. I'm going to be 40 like the guys in Step Brothers and never move out. No, I'm kidding, actually. But I will eventually I'll move out, and that number will go up. And I would like to really focus on being close with my family and my friends. Sometimes I will lean more heavily in one area and there's trade-offs I would take away from relationships maybe. So I'm trying to be better at that over the next 5 to 10 years and try to find the right balance. I don't know if I ever really will feel like I'll hit that, but that's important to me, being a good person and being someone that my family and friends feel like they can count on. So those two, at some point I'll buy a car. Yeah, I have like a really old Ford Expedition, so that's coming up in the next couple of years.
Mm-hmm.
I don't got anything like really grand planned. I want to continue to be valuable to SNS and help them grow their platform and be a part of that. And I think everything kind of flows together into one sort of mission that I'm working towards.
Mm-hmm.
And I like to be around the people that I have around me right now. So it's going good. I'm very happy with where I'm at, and I think it'll be a fun 5 to 10 years.
Mm-hmm. I can't believe you didn't bring up being a shark fisherman.
Yeah, man. I have the rod and the reel. I have the whole setup, but it's hard when you live in Cincinnati, and I am busy. So like I can only get down there a couple weeks out of the year. I would like to catch a tiger shark. That's one thing I would like to do. In the next 5 to 10 years, you could note that down. If I haven't done it, I've failed.
Mm-hmm.
I will do that at some point.
Well, I'm writing it down now.
Yeah, that would be cool. I went down in February and hired a guy to take me out. His name was Andy, and he was really nice. And I had like 1,000 questions, and he was helping me use my rod and reel that I impulsively bought. Is way too nice for what I need. But it's down in my basement and it's collecting dust, but it looks damn good. I would say that it's a pretty neat setup. So yeah, hopefully I get one. Yeah.
Well, if it's too nice of a setup, it just means you can only grow into it, right?
Yeah, absolutely.
So you'll be good to go.
Mm-hmm.
I am just curious, what was it like being on the other side of the mic today? I know you're typically the one interviewing.
Weird. I've never done it before, so I was kind of not really sure what was going to come out of my mouth today. And normally I will just ask questions and listen very happily. So this was fun. Yeah, it was cool. And I thought it would be neat to get kind of a better perspective on like how my guests might feel, or anyone that I'm doing video content with. I do a lot at SNS with our quarterly interviews. So like I do like it's called Between the Lines, where we send out our quarterly reports that are written and they're very detailed. Our CFO Coleman does a good job, and I'll do like a video sit down with them where I'll kind of just grill them on things that like some investors might not pick up, but reading between the lines, this is what I think is important, whether it's bad or good. I'm pretty straightforward with it. And I think you should try to find a sponsor who is willing to be straightforward like that if you are investing. It's helped me with that indirectly. Like I was saying earlier, it's cool to have a hobby that also benefits you in other ways.
Yeah. I know that's part of the reason why I started this is I think it's a lot easier to interview other people than to talk about yourself.
But yeah, people love talking about themselves. They do. It's just human nature. So yeah, you get good at asking the right questions too, and it's a lot more fun too to just listen.
Yeah, I've noticed that as well. If I go back and look at my progression, it's like, man, my interviewing skills weren't very good first couple episodes, and then the question asking is where it all comes into play. You know, being an active listener, trying to think on the spot. I definitely underestimated that before getting this started. So I do have a newfound appreciation for podcasters who are just great interviewers in general.
Mm-hmm. Yeah, there's a lot of them out there. Like, what are your top few? I think me and you talked about the All In guys doing some cool stuff.
Yep. I really like the All In podcast. This one's not a podcast, but it's the School of Hard Knocks. I'm sure you've seen that guy who goes up and interviews millionaires or billionaires and just kind of asks them how they did it. I will sometimes find myself just getting lost on their Instagram page, and I'm like, man, it's been 30 minutes, and I just was scrolling for 30 minutes watching 45 different interviews. I love just hearing from successful people in general.
Mm-hmm. Yeah, it's a good way to learn. I feel like I always have something playing in the background, whether I'm driving to work or working out, or just doing laundry. So if you want to put the foot on the gas and try to learn about anything, it's out there. Yeah.
To wrap up, maybe I'll hit you with this. So I know on your podcast, you ask people for their biggest piece of advice, you know? So what would be your biggest piece of advice for the listeners?
Yeah, I should have expected this one to come. I would have put more thought into it. I feel like my head goes first towards two things. One, do hard things. Don't take the easy way out in anything that you do. I feel like the hardest things in life, ultimately, for me at least, have been the most rewarding and fulfilling as well. And then, I guess, twofold, I'm going to give you two. Remember why you're doing what you're doing. So if you're going through this grind and you have a goal you're trying to reach, I think there's a lot of internet hustle culture and everyone wants to just burn themselves out, which there's nothing wrong with hard work. I work hard and I think that it's really good for you, but you can do short-term bouts of really hard work, but long-term, don't let the relationships in your life and the things that matter to you, whether it's a friend and being close with them, calling them every so often, getting dinner with your family, like I said earlier, going fishing with your brother, hanging out with your sisters. I feel like what makes us human is that human connection and those relationships. So don't get too lost in the hustle that you lose sight of what is really important. And I think everyone's definition of that might be a little different, but to me, that's, I think, valuable to think about. I hope that was okay. I would have put more thought into this had I known you were going to ask that.
I love it. I know I'm used to hearing your listeners' pieces of advice, and I was just curious on your own. I think it's great advice. You know, the only thing we can't get back is time. And I'm a big family guy. I love to spend time with my family, love to be around my fiance, and just cherishing those relationships, not getting too focused on work and hustling, you know, making time for what's really important.
Yeah, my dad's working on our spaghetti right now. He's making it for Sunday, and my Friday night will be spent downstairs with him working on it. And he said he's going to teach me a little bit. And I'm really looking forward to that. That'll be fun. Mm-hmm.
Love it, Steve. Well, really appreciate your time today. I think it was some great conversation, some great advice from you. So if the listener is curious and learning more about SNS, where can they come find you?
Yeah, first and foremost, snscapitalgroup.com. Go check us out. And if you're interested in learning about real estate investing, we have a contact form there that goes directly to me. So I would be happy to talk about it if anyone's interested. Second, I think LinkedIn's a good spot. You can search my name and feel free to reach out and connect. I'm always happy to talk. And then if you're willing to check out the podcast, JT shouted it out already. And hopefully, if you're interested in any guests that I bring on as you're looking through, maybe you find some value and listen to a couple of those too.
Just so you guys know, Steve's a great guy. So he had on a couple guests that I was really, you know, I love their story. I wanted to meet them, and he went out of his way to make an introduction for me. So just, you know, take advantage of it. Steve's a good guy.
Thank you. Appreciate it, JT. JT's a good guy too. So whoever's listening to his show, he's a good guy. I'll just return the favor.
Throw it right back at me. I appreciate it, man.
Yeah, man. Thank you for having me on. I appreciate it.
Thank you guys for listening. I hope it was valuable, and we look forward to seeing you on the next episode of Vault Talks.